So, welcome to today's presentation. My name is Peter Yusuf, Senior Market Analyst at IronFX. We're going to be mixing technicals with fundamentals today, and in front of your screens, you have your USD's daily chart. All charts to be presented are to be of the same time frame unless otherwise stated. Please give me a sec. Sorry for the disturbance, but in live shows that appears. Anyways, starting with Euro USD, we note the jump of Euro USD yesterday. However, that was mainly due to the weakening of the US dollar rather than the strengthening of the euro. Nevertheless, I would also be noting that the euro got some support as financial releases tended to improve the outlook. We had the preliminary PMI figures for April. They came in better than expected. And I would be noting here that most probably that tended to provide some support as increased economic activity was reported for the month of April here. There's a flip side though. And the flip side is in regards to monetary policy. There seem to be increased statements by ECB policymakers that the bank may proceed with a rate cut in the June meeting, or at least that scenario seems to be enhanced. And in my opinion, that tended to clip any gains of the euro yesterday and tends to weigh on the common currency today. We note that we have a number of speakers from the ECB today, and we may see them actually weighing on euro further should they stress or imply that the bank will cut rates in the June meeting. Other than that, I would be noting that from Germany we got the IFO indicators for April, and they were better than expected, both as for economic outlook, that implies that there is a less pessimistic outlook on behalf of German investors, and we're talking about the German economic outlook. Yet at the same time, it seems as if the conditions on the ground of the German economy are improving. So practically, the largest economy in the Eurozone tends to improve, and not only per se right now, but also it has better outlook. And that, in my opinion, may provide some support for the euro in the coming months. Now, on a technical level, we note the partial reversal of yesterday's gains during today's Asian and early European session. It's characteristic how the pair dived below the 1.0690 resistance line once again. The RSI indicator was aiming for the reading of 50. It did not quite reach it and corrected lower. So it may be a little bit too early, but we may see the bears actually regaining charge of the past direction. And at this point, I would be noting that we may be seeing downward trend line guiding the pair once again, like this. And if that's the case, then I would expect it to drop, possibly aiming for the 1.06 support line. It's going to be very, very interesting. On the USD side of the pair, I would note that yesterday we had an improved market sentiment, and that improvement of the market sentiment benefited risky assets. And I'm talking about not only commodity currencies, say for example like the Aussie or the Canadian dollar, which it did have effect, but also your stock markets. And that improvement of the market sentiment may have provided safe haven outflows for the greenback. So we may see now a correction higher for the USD, which could weigh on Euro USD. It's going to be an interesting American Open. By the way, we are also getting the durable goods orders growth rate, and a possible acceleration could imply some more confidence on behalf of US businesses to actually invest in the US economy, and that could provide some support for the US dollar. On a technical level, I would note that we had 1, 2, 3, 4 days of continuous rise despite some corrections lower. For the time being, I tend to treat this as a correction and not a change reversal. And it would be interesting if we drilled into the 1-hour chart for more detail. You can see how we have 1, 2, 3, 4, now 5 lower trows, higher trows, and 1, 2, 3, 4 higher peaks. Should the bulls take over, I would expect the price action to breach the 1.069 resistance line, breach also the pre-mentioned downward trend line and a signal that the downward motion has been interrupted, and start aiming for the 1.0760. Let's have a look at USD JPY. Now, there is a uniqueness about this pair regarding yesterday's movement, and that was practically the fact that the US dollar weakened against most of its counterparts, however, not against the yen. JPY continued even slightly its movement upwards and has currently breached just briefly the 154.78. It's a little bit unconvincing, but the bullish sentiment seems to be maintained here. So I would be maintaining also the bullish outlook, setting the next possible target for the bulls at the 156.60. Now, on a fundamental level, the weakening of JPY is an issue. It's an issue at least for Japan. And carry trade may have more or less weight on JPY more than it should. I wouldn't be surprised to see the Japanese government actually intervening in the markets, yet Japan's dilemma may also have to do with the fact that JPY's weakening was largely due to the rather loose monetary policy of BOJ. And that does not seem to be changing anytime soon. So practically, carry traders have the chance to continue to sell yens for US dollars and benefit on the interest, but that would practically mean also that any market intervention by the Japanese government could prove to be of temporary nature. So it's like throwing money to the wind. Nevertheless, should the market intervene, the Japanese government intervene, I would expect a substantial drop of maybe even 400 to 500 pips. It would be substantial. We saw that happening in the past. I wouldn't be surprised to see it happening in the coming days as well. In such a case, we may see USD JPY dropping, breaking the upward trend line guiding it, breaking also the 152.70 support line, and thus starting to aim, if not actually aim, if not breach the S250.80. However, that remains to be seen. Okay, let's have a look at USD CAD. Now, USD CAD tends to generate our focus today. And we have multiple issues which tend to be of interest for cat traders. As for financial releases, we expect that Canada's retail sales growth rates for February is to be released in the early American session today. The rate is expected to accelerate from minus 0.3% to 0.1%. And should the rate accelerate as expected or even more, we may see the loonie getting some support, the CAD. In which case, we may see USD CAD dropping somewhat once again. Mind you that it's the 1, 2, 3, 4, 5 days of continuous strengthening of the Canadian dollar against the USD, as the pair is now bouncing on the 1.36 support line. You can see it right here. The S1 has proven its worth. And the second issue I would be highlighting would be on a monetary level. On a monetary level, we're getting BOC's meeting minutes, the minutes of the last meeting practically. And I tend to expect the document to have a slightly, if not more intense, dovish inclination, a dovish tone. And we see how BOC has started to ease its hawkishness. I think the minutes are going to be providing us with a deeper insight regarding the bank's intentions. And should the document actually be leaning on the dovish side, we may see the CAD losing some ground, and that would allow the USD CAD to rise. On a more fundamental level, I would be highlighting the market sentiment. That's one. Should the market sentiment continue to improve and be more risk-oriented, we may see the CAD getting some support. As a commodity currency, it tends to be reviewed as of riskier nature, and thus any improvement of the market sentiment tends to support the CAD. On the flip side, any market cautiousness could weigh on the Canadian dollar. And at this point, it would be interesting also to note the conceived positive correlation between the Canadian dollar and oil prices. Mind you that oil prices yesterday were on the rise. Should we see oil prices continue to rise during today's European and American sessions, we may see also the CAD getting some support here. Why? Because practically Canada is considered a major oil producing country. So whenever we see a rise of oil prices, that would inherently mean higher income for the Canadian economy. On a technical level, the fact that the price action has bounced on the S1 1.36 tends to imply an interruption of the downward motion. But at this point, I'm not quite convinced. And I'm saying this practically for one reason. The reason is that the RSI indicator has reached the reading of 50 and stabilized at that. On the one hand, that tends to imply that the market has not been entering a bearish mood, as the indicator's reading was not able to breach below the reading of 50 and start aiming for the reading of 30. So we may see some uncertainty regarding the future direction of USD CAD, in which case we may see it stabilizing just around the S1. Should the bears regain control, I would expect nothing less than the pair to breach clearly the S1 1.36 and start actively aiming for the 1.3570. Sorry, the 1.36 is actually a mistake. It should be the S1 1.3660. Let me correct that. There you go. So I consider the S1 as a key level here. Should it be broken clearly, I would expect the pair to continue to move decisively towards the S2 1.3570. On the other hand, the fact that the pair has provided support, substantial support, yesterday and during today's Asian session tends to highlight its importance and may be able to reverse the price action and start steering it towards the 1.3725 resistance line. That's the R1. Okay, let's have a look at cable. A chart which was pretty similar to the euro. But in this case, we have a difference which is substantial. And the difference is that despite GBP USD actually jumping like Euro USD, GBP USD remained within the boundary set of a sideways motion, and namely these are the boundary set, the corridor between the S1, the 1.2335. You can see how the pair bounced on it, and the R1, which is the 1.2470. You can see how the pair respected the upper boundary of the current sideways motion. So we tend to maintain a bias for the sideways motion to continue. On the flip side, I would be noting the possibility of some bearish tendencies, and I'm highlighting that. Why? Because we are having an RSI indicator which was unable to actually breach above the reading or reach the reading of 50. So there is still a residue of a bearish sentiment in the market for the pair, which could drive it lower once again. Let's have a look at AUD USD. Now this is AUD USD's daily chart. We can see how the price action yesterday clearly broke the 0.6455 and aimed for the 0.6545. Mind you that the pair, despite peaking near the R2, is now correcting lower, and you can see that more clearly in the 1 hour chart. That was the peak, and note how the candlesticks have moved slowly but steadily lower. Nevertheless, for the time being, we tend to maintain a bullish outlook based on this upward trend line. Back to the daily chart. That's better. Okay, some of you guys have mentioned the formation of 3 white soldiers. The formation is still being formed. I would like to see how this ends today. For the time being, let's reverse the role of the R1, given that it has been broken yesterday, turn it into a support line. I'm setting my sights on this level here. Let's zoom out a little bit. It has also provided support here. Seems to be quite valid. I'm keeping it, and that would be the R3 0.6725. Readjusting the chart. Let's correct the labels. Coloring the R3 in red. The R3 now is being set at 0.6725. The R2 at 0.6635. The R1 at 0.6545. The S1 at 0.6455. The S2, that could go a bit lower. Please allow me. That would be more appropriate given that we have a nice true here at 0.6365. And the S3 could also go lower. $62.70. Let's have a look. Yep. Now definitely we have set now the resistance and support lines. Allow me to set also an R4. I know it's a little bit off chart, but it marks a peak here at 0.6870. Red. It's also highlighting the peak of our chart, the highest point in our chart. And at this point, I would like to also intercourse with Fibonacci levels. So setting practically the S3 and the R4 as the 0 and 100 levels, we're practically meeting at the R2, which is the 61.8 level. The 50 level is off, near but off our R1. The 38.2, we don't see that at all. And the 23.6 tends to be missed out. It was broken consecutively. Not so convinced. Okay. Let's clear the chart. Once again, for the time being, we tend to maintain a bullish outlook. We note that the RSI indicator has reached the reading of 50 and seems able to advance even higher. But at some point, a correction lower should be made. It's going to be interesting to see how the pair is going to be closing its price action today. Mind you that the Aussie got some support today during the Asian session, as the CPI rates of Australia were higher than expected on a quote-unquote level. It was characteristic how the market reacted at the time of the release. Allow me to show you. I'm drilling to the minute chart, unlocking it and widening it substantially. Let's go back. Note the gap here. That was at the moment of the release. And it was characteristic, the positive gap, was characteristic of how the market was taken by surprise. Anyway, on a fundamental level, I still view the Aussie as a possible candidate to get some support should the market sentiment continue to improve, given that the Aussie, given its commodity currency nature, is considered a risky asset and tends to gain more on a positive market sentiment, and vice versa. A cautious market sentiment tends to weigh on the Aussie. Should the bulls maintain control, I wouldn't be surprised to see the pair reaching, if not breaching, the R1 0.6545. For a bearish outlook, in my opinion, bearish outlook is a little bit far-fetched. Some stabilization, yes, but bearish outlook, maybe too much. But for a bearish outlook, I would require the breaching of the pre-mentioned upward trend line, which is very steep. We have to note that. But that would be the first signal of an interruption of the upward movement. On second note, I would also require, though, a breaching of the S1 0.6455 and the price action to start aiming for the S2 0.6365. Okay, let's have a look at WTI, moving away from the FX market now. Note the jump during yesterday's session it has breached the 82.25 resistance line, now has to be turned into support. Let's correct the labels as well. R3 being set at 90.55, the R2 at 87.10, the R1 at 84.10, the R2 at 82.25, so that's the S1, the S2 at 80.35, and the S3 at 78.20. One could argue for wider margins between the support lines mainly and the first resistance line. That would be quite feasible. Yet for the time being, I tend to remain quite cautious and I'm keeping the margins rather tight. For the time being, directionally wise, despite the jump yesterday, in my opinion, the jump actually verified the sideways motion of the commodities price. And we expect the price action of WTI to revolve around the S1 82.25. The RSI indicator is running along the reading of 50, also highlighting rather indecisive market about the direction of the pairs next leg. So we tend to maintain a sideways movement bias, possibly in the corridor set between the R1 84.10 and the S2 80.35. It's going to be a very, very interesting development should the price action of WTI present some bullish tendencies. And okay, let me explain that. What we are seeing here is that we have WTI's price actually moving lower during today's Asian and early European session. That's clear. You can see it. It's a small red candlestick. And that may have been caused also by the strengthening of the USD, because practically whenever we have a USD strengthening, that means that importers of oil have to pay more to actually get the commodity. So demand drops. On the other hand, we had yesterday the release of the AP weekly crude oil inventories figure. The release showed an unexpected drawdown in US oil inventories of about 2 million barrels, if I'm correct. But the issue here is wider. And I'm mentioning this as a question mark on whether the US oil market is actually starting to tighten once again. And if that's the case, we may see increased support for WTI's price. I think that oil traders will be looking after the release of the EIA crude oil inventories figure today. It's the sister indicator to AP. And should we have a confirmation of the tightening of the US oil market, we may see oil's prices getting some support. Should the bulls maintain control, I would be setting the next possible target for the bulls at 84.10, that's the R1. I expect for a bullish outlook the R1 to be breached, and that would pave the way practically for the R2 87.10. On the flip side, should the bears gain total control over the commodities price, I wouldn't be surprised to see the commodities price actually breaching the S1 82.25 and start aiming, if not even breaching, the 80.35 resistance line. That would also provide some validity to the downward trend line, which we have already drawn, and it's the upper level of the symmetrical triangle. Let's have a look at gold. There you go. Now gold has dropped has broken the 2360 support line, now turned to support, to resistance, and continued lower to start aiming for the S2 2305. Okay, let's definitely correct the labels here. Starting with the S3 at 2150, the S2 at 2228, the S1 at 2305, the R1 at 2360, the R2 at 2430, and we're finishing off with the R3 at 2500. Now, for the time being, we note the slight bearish inclination of gold's price. In my opinion, on fundamental level, that could also be explained by the negative correlation of the USD with gold, which seems to be emerging lately, once again. And it's quite interesting. It was something which had been broken over a couple of weeks now. Should the bears maintain control, we may see the price action of gold actually breaching the S1 2305. It's interesting how the level is providing support right now. Should the S1 be broken, we set the next possible target for the bears at 2228. It used to be a former resistance line. Now, given that the price action is above it, has turned its role into a support line. On the other hand, we see how the RSI indicator remains still above the reading of 50. It's aiming for it, but it's still above it, which tends to imply an easing of a bullish sentiment for the precious metal, but it does not actually mean that a bearish sentiment is building up. So we may see some uncertainty regarding the direction of the precious metal. You can see how the precious metal is falling, yet the differentials, the bearish differentials are narrowing, implying that each daily drop becomes less and less. And that may more or less imply that the bears got a little bit tired here. So a stabilization is quite possible. For a possible bullish outlook, in my opinion, bullish outlook is pretty much far off right now. But it's still a possibility, and we should cover that. Should the bulls take over, I wouldn't be surprised to see the price action of gold breaching the R1 2360 and testing, if not actually even breaching the R2 2430. To tell you the truth, I wouldn't feel comfortable for a bullish outlook unless I see the price action of gold breaching the R2. Mind you that the R2 is a record high level. So that may cause the bulls to hesitate on a technical level. On a fundamental level, besides the negative correlation between gold and the US dollar, which we have already mentioned, I would be also citing the possibility of slow mining, while at the same time we may see more demand for gold given the wider industrial use. But also I would be citing here gold purchases by central banks, especially China and India. Now, all of that combined tends to imply that there seems to be a structural deficit of supply to demand, implying that demand is wider than the supply side. And that may allow gold's price to proceed to new record highs. It's not something which is going to be done within a day, but it may keep it supported. Okay, let's have a look at your stock markets. And at this point, I would have a look at Dow Jones. Okay, you can see here it's the daily chart of Dow Jones. Let's readjust it. 1, 2, 3 days of gains. And today there's some hesitancy. I think we will be seeing the market sentiment improving and volatility improving, possibly showing us a clearer direction than what we're seeing in today's European session. Big question about your stock markets is Tesla. Definitely Tesla. It's a big issue. We're getting conflicting fundamentals about the company. And among which I would be noting that we had an earnings release that was quite disappointing. It missed its targets both on an EPS and a revenue figure level. So the company got less sales and at the same time less earnings from it. Mind you that the new marketing team of Tesla has been slashed, and that tends to imply a change of marketing strategy, which in turn highlights, in my opinion, the relative instability of Tesla as such. So I'm quite worried about Tesla, given also the intense competition Tesla gets from China, especially BYD. Mind you that BYD now is the largest EV manufacturer worldwide. It's larger than Tesla. And on the other hand, we saw how Tesla share price jumped and actually soared on the prospect of lower cost cars. However, that's in the future. And the second issue, which would be of interest and among the positives for Tesla, is Tesla's AI innovations. Elon Musk practically highlighted the possibility of driverless cars. And that's a very enticing prospect, but it's still something which has not been exactly proven. I would like to see more concrete evidence towards that end before switching my outlook. For the time being, once again, I'm highlighting the rise of Tesla's share price. We most probably may see that continuing during today's American session. The big question here is more fundamental for US stock markets in general. And should we see an improvement, a further improvement of the market sentiment, most probably we will be seeing not only Dow Jones, but also Nasdaq and S&P 500 ending the day in the greens again. But that remains to be seen. We hope that you found this report useful. From all of us here at IronFX, best wishes for solid trading.
Okay, hi everyone. Welcome to today's webinar. So before we get started, I'm gonna give about 2 more minutes to let more people join our session before we get started. In the meantime, let me know if you can hear me and see me in the chat. And yeah, I'll see you guys in about 2 more minutes. You can see more people coming in. So yeah, we'll start in about 2 more minutes. Thanks everyone. Okay, I forgot to start my recording earlier. Okay, no worries. So it shows strong recent bearish divergence versus the RSI. So that's the main point. But lastly, you can see that we have a combination of the RSI breakout of the ascending trend line. Secondly, we have a bearish divergence. And lastly, we have price itself breaking out of the ascending trend line. So that all gives us a really high probability that price is going to continue to break out of the ascending trend line and move in a downtrend. And you can see that's exactly what happened. Price broke and dropped strongly. Okay. Okay. We have another example here. So you can see we really have a lot of examples to go through today. But basically, in this example, both prices are moving in a descending trend line. RSI is breaking out of the trend line. Okay, and then subsequently, we can see that there is a bullish divergence. Price is making a lower low. RSI is making a higher low. Okay, so that's a bullish divergence. And currently, price is testing the descending resistance line, and we're wondering if it's going to break out of it. So with all 3 points, firstly, it's testing the line. Secondly, we have this RSI breakout of the descending trend line. And lastly, we have a bullish divergence as well. Okay, and that all shows a successful breakout of descending resistance line as forecasted by our RSI. Okay, any questions so far? Okay, all good. Now let's look at some GIFs that show us how a bullish divergence works. So if we take a look at the image first, price is moving in a descending trend line. And we can see, so the first thing is we see price moving in a descending trend line. Second thing is we have a bullish divergence on our stochastic. So price is making a lower low and our stochastic is making a higher low. So that's the second thing. And lastly, we have our resistance level that the swing high, which is in line with our 100% Fibonacci projection. Okay, and then if you look at our GIF, you can see what happened after that was that price subsequently broke out of the descending trend channel, and moved upwards, testing that resistance level very strongly and reacted off of it multiple times. If you're wondering what resistance level I'm talking about the 1.56099 level. Okay, now let's look at another example. Here is more straightforward. We just have price moving in a bullish divergence with price making a lower low and stochastic making a higher low. And subsequently, after that, we also see price moving upwards. And in fact, it actually moved above our Ichimoku cloud as well, which suggests a bullish signal. Okay, do you guys have any other questions? If not, let me just pull up my charts and we can look at a couple of charts together and see if we have any support or hidden support resistance levels or any divergences. Okay, if you guys have any charts you'd like me to go through, let me know in the chat as well. Okay, let's look at start off by looking at AUD maybe. Okay. Okay, so on our weekly time frame, prices are moving in this descending trend line. Okay, so again, what makes a valid trend line is if there are at least 3 touches, which you can see here, we do have that. And then let's go in with on a daily time frame to go in with our support and resistance levels. So I'm gonna see if I can identify any trends first, but here we see prices kind of ranging. Okay, so firstly, I'm gonna place my pivot over here. Okay, I'm gonna label this as an intermediate resistance. Okay, and then my first resistance, I'm just gonna place it up here. Okay, and then for my first support, I'm gonna place it at this double swing low. Mm, okay, and I try and pull it back as far as I can without cutting too many bodies of candlesticks. Yeah. So for example, over here, I would not place it here because of this area here that cuts a lot of candlesticks. So if you're just cutting the wick like we are doing here, that's perfectly fine. Okay, now let's go in with our Fibonacci levels. So I'm gonna go in with a retracement and I see my 61.8 line up with my first support. Next I'm going in with a projection. Don't think. Okay, 61.8 lines up nicely. And over here, I think we have another extension. Yeah. So for extensions, we use 127 and 161.8, and we are using a Nike tick kind of shape. So if you can identify this kind of pattern, then you can use this 127 and 161.8. Okay. Uh, Again, these Fibonacci levels don't have to line up exactly at the level. As long as it's kind of near that level, that's good enough. Okay, so let me just highlight this level here because we have a confluence area, which is basically when two or more Fibonacci levels line up in the same area. Then you can see my 61.8 also lines up with that area. And my 50% actually as well. So I'm just going to keep those two. Okay. So here we're definitely going to expect to see some resistance in this area here. Now let's pull out our indicators. I like to start off with Ichimoku and MACD because at one glance you can see exactly what these signals are. So for Ichimoku, price is currently moving in the cloud, so we can't really say much except that the trend is probably changing. So we see price was moving below the cloud before, which is a bearish signal. Now that it's moving within the cloud, we might see prices move in an upward momentum instead. But we can only confirm that once price has moved above the cloud. So I'm going to remove that for now. And our MACD is also giving us a bullish signal. Okay, so that supports our analysis. Let's look at stochastic first. Okay, if we go back to my slides, we typically look at 533 as our settings. So let's use that. Okay. Okay, let's see if we have any divergences. Over here, I can see that we do have a hidden support. So this is the tool that I was talking about earlier. Basically, okay, I'm gonna hide my MACD first. Okay, so basically when price is making a higher high like we see here, okay, just a second. I might change this back to 21. Okay, reason being my time frame is daily time frame. Um, here. So between these 2 points, right, price has made a lower low, slightly lower low, or rather, price is making the price is moving in this first support, okay? Whereas over here on our stochastic, we can see a very sharp difference. Price is definitely making a lower low. Okay, so this could suggest that price is going to continue to drop down here. Okay. So even though the default settings are normally 533, you can adjust it according to the time frame that you're using and according to like what works best for your chart and your trading strategy. Nothing is ever, set in stone. It's really dependent on what charts you're using. So, yeah, feel free to adjust it accordingly. Okay. I guess another example we can see if we can find more divergences just from this chart alone. Okay, price is making a lower low here, and here it's making a slightly higher low. You can see immediately after this, if we replay it, okay, you can see price proceeded to move in an uptrend after that. Okay, that's a pretty small example, but yeah. Okay. Any requests for any charts that you guys would like to see, or any examples you want me to go through? Mm, oh, we can take a look at stochastic as well. Okay, so we're looking at stochastic now. Let's look at RSI. Mm, can I add more examples on the chart? You mean do more of these divergence examples? Identify more divergences? For example, over here, we have a hidden support. Okay, whereas on our price, it's making a lower low. Okay, and the tool that we're using is just the horizontal line. So it makes it really easy for you to identify whether it's a support or if it's a divergence. Okay, a very simple one to identify is over here. Okay, so you can see price making a lower low and our RSI making a higher low. Okay, you can see after that, price proceeded to after this divergence, price proceeded to shoot upwards. Okay. Yeah. So yeah, that's on the RSI. Um, okay, another one here. Price making a lower low. Okay, and then RSI making a higher low. Okay. So then you see price also shot up after that. Okay, shall we look at another chart? Okay, let's just focus on looking for divergences, I guess. RSI, stochastic. Let's focus on RSI first. So on our RSI, you can see price moving in this support level. Okay, but then you can highlight the points that you're looking at as well to make things easier. And price is making a higher low, whereas here we have a hidden support. Okay, after that you see price shoot up as well. Another example over here. Price making a higher low, sorry. And here price is making a lower low. Okay, so this is a bearish divergence. Okay, hidden resistance. Now maybe we take a look at that. Over here, you have a hidden resistance level from between this point to this point here, right? We can definitely see that price was making higher highs. Okay, so we also see subsequently price proceeded to drop, reverse off of this resistance level. Okay. Okay, any other questions? Anything you guys want me to go through? Any charts you want me to take a look at? Okay, if not, then that's all I have for you guys today. Thank you guys so much for joining me. I'll stick around if you guys have any other questions. But if not, that's all for today. Thank you guys so much for joining me. I hope you guys found this helpful, and I'll see you guys again next week. Thanks, everyone. Bye. Have a great rest of your week. Thanks, everyone. Yep, take a look at euro dollar. Sure. Do you want to just take a look at the divergences, or you want me to do a analysis? Yep, we can do both. Okay, so on our daily time frame, we have this as our first resistance, and then my pivot, right? And then lastly, my first support just here. Okay. Um, yeah, so then I'm going in with a projection. Okay, my 61.8 lines up nicely. Going with retracement, my 50% lines up. I think my retracement here also lines up. Okay. Um, so here we have, oh, not really. Okay, I think that's all the levels we have. So then we pull out our indicators, Ichimoku MACD. Okay, price is moving within the cloud, so we can't use that. MACD is moving, ascending in a bullish signal, sorry. So if we look at stochastic, um, okay, here price is kind of moving upwards, right? Making a higher low. Mm. Okay. Here it's kind of it's not really a support level, kind of making a lower low here. Okay, you can see from the dotted line that it's not horizontal, right? So it is slightly moving in a downtrend, or rather making a lower low. Okay, so it is a bit bearish, so we might continue to see it move down. Okay, similarly for our resistance, here we have a hidden resistance level. Okay, and then we see price moving in, making a lower high. So that might actually be better than this. Yeah, so this is a bearish divergence as well. Okay. Yep, no worries. Okay. Yep, if there's nothing else, uh, that's all for today. Thanks everyone. Bye.